Hello, everyone. I hope all of you are doing very well. This is Adarsh here from Finhancers. We are here to discuss the fallout from Budget 2023. I'm joined by Miss Vanitha as usual, my
Hi.
partner in crime from cPROFIT Wealth, the president and CEO. So I think you must probably recollect our previous video where we spoke about our expectations from the Union Budget 2023-24, which happens to be the last and final budget of this particular government. So this is actually a massive budget, so to speak, because there were a lot of major announcements that were expected from the perspective of taxation that will benefit the middle class, HNIs, and NRIs, and so on and so forth. Of course, a lot of focus was given to areas of investment, divestment, and sky is the limit, to be very honest. And we wish to take you through all of that as part of this video. And of course, it's been quite some time since the budget took place. It's been nearly, I would say, it's been well over a week since the budget took place. So, of course, we are probably a bit late to react to it. But the reason why we have taken our time is because we wanted to provide you the best in class information with the highest quality after seeking the highest level of clarification from the government circulars and newspapers from the most reliable of sources. Uh, and that is exactly what we're about to do as part of this video. We wish to take you through the intricacies of it. And of course, we're always open to answer any questions. You can always email us at info@cprofitwell.com or support@finances.com in case you wish to post queries to me or my company. So without any further ado, we're going to go straight into it along with Miss Vanita. So I would like to ask you one important question, that is, what do you think about the budget?
Yeah, just first of all, just greetings, investors, and it's been really just good to connect with you all to just update on this particular session. And Adarsh, I would love to just probably just uh, simultaneously just play a presentation so that investors will understand it much better. And let me start with a disclaimer. The information contained in this document is extracted from different public sources. All reasonable care has been taken to ensure that the information contained here and is not misleading or untrue. We are not soliciting any action based on this material, and it's created for general information only. And definitely investors should consult us. And yeah, so one is right, talking about the budget, it is a balanced budget with a very clear focus on capex, because capex expense have been to the extent of 30 to 33%, and the fiscal deficit for last year was pegged at 6.4%, and it fell on the same lines. And for the coming year, it's pegged at 5.9%. And further, by 2025, the finance minister said just the fiscal deficit would shrink to 4.5%. It's really phenomenal. If this happens, it's really great. And the nominal GDP is pegged at 10.5%. And the growth expectation for the economy is set as 7%, which looks very robust. And the clear focus is on three Gs, that is growth, governance, and green energy. And it's literally to just boost or give so much of impetus to just consumption. And India is definitely there is a consumption driven economy, and actually just so much of expectation or a lot of things are set on the public private investment as well. Probably I would call this budget as a big budget, maybe something which could just give more focus on banks, because the just to reduce the non-performing assets of the banks. And then so much of just pressure has been just given from all sides to just maybe just probably improve the numbers of the credit growth. And again, the infrastructure spending is going to be humongous with 13.4 trillion kind of an expense, say like 10 trillion on capital investment outlay and 2.4 trillion on railways. And then again, actually, this Awas Yojana gets continued with 790 billion kind. And again, green growth. So that is getting just close to just 450 billions kind. So I would call this budget as a big budget.
It is certainly a big budget because I think great impetus has been given to banks, infrastructure, green growth, all of which is going to heavily help the country develop itself to a great extent. And of course, the evidence is in the pudding, because the government for many years in a row will be spending more than what it will be earning. because the fiscal deficit for the upcoming financial year is projected to be at 5.9%, as you rightly put out. And of course, the expectation of the government, as you again put out, was to bring it down to 4.5% by the financial year 2026, which is something we are looking forward to. But of course, now that we have given a very good understanding of the areas of focus from this particular budget, we are going to go deep dive into the most important aspect in the budget, which is the key areas of the budget. So, what are the key areas for us to focus on from this very budget? So, that is something that all of us have in mind, and we'd like to hear from you on that.
The government mainly, just as I said, they were talking about the 3Gs. And then apart from that, there were 7 key areas. One is the mostly just finance minister was talking about the inclusive development and reaching until the last mile, and the youth power and the green energy, kind of green energy and its growth, and the unleashing the potential, maybe just by bringing in the digital education across the country, and the infrastructure development, and the financial sector focus. And not even a single sector is left behind. So everything was given so much of focus. And then probably the sectors which would get benefited through this is like capital goods, because already, as you know, like PLI scheme was brought in by government, incentivizing the companies, which focuses a lot on productivity on those specific lines of the government. And this has really just boosted the Make in India, or the productivity in India through the Make in India move. So 30 to 40% has been just produced well within India. And again, just rest all infrastructure was also just given a focus. So like cement, steel, infra, power, and FMCG. So, and the major negative impact is on the insurance sector, because they hit it back on the traditional plans and the taxation. And a couple of years back, the government spoke about the ULIP and its taxation. So now actually just they tried just hitting on the traditional plans as well.
I think that sort of clears up and provides an idea of what we are generally expecting from this very budget, and what are the key areas that the government is actually focused on. Of course, a great impetus has been given to those 3 sectors that we spoke about in the previous slide. But of course, the budget was more or less comprehensive, and they were able to touch upon every major sector that is there across the country. Now, coming to the most important question that all of us have in mind, of course, and there was a great deal of clarity that was to be provided, because after the budget, we had a few questions and we took a bit of time to understand, and then we want to project this in the most positive way possible and in the clearest way possible, and that is the tax proposals for the middle class earners. And of course, we are in a country where a good number of people are in the middle class. And to just give you an understanding of how many people actually are there in the middle class category, you should be aware that the share of the middle class, now this is actually as per a research from the People Research on India's consumer economy. So they actually define middle class people as those people that earn somewhere between 5 to 30 lakhs per annum. And they are expecting the number of middle class people to go up to 30. I'm sorry, I think it says the share of the middle class with an annual household income of 5 to 30 lakhs more than doubled from 14% in 2004-5 to 31% last year. So when they say last year, I mean 2022. And it's projected to rise to 63% by 2047. Of course, 2047 is also the year within which we expect to see India at the topmost, even above China and the US. Now, I'd like to hear from you on what are the various proposals we have in store for the middle class earners, because that's where the huge cream of the population lies.
Yeah, that's great. Actually, just one is the basic tax exemption limit. Now it's very clear. And see, just up to 7 lakhs, people need not pay any tax. Maybe, right, as you remember earlier, the government spoke about the old tax regime and the new tax regime. In this particular budget, there is no change in the old tax regime. And probably there are a few changes in the new tax regime. As I said just earlier, up to 5 lakhs, the tax was exempted. And the basic exemption was up to 5 lakhs. Now it is extended up to 7 lakhs. Again, on top of it, even the new tax regime, people will just get the standard deduction of 50,000, which was not there earlier. And again, also just the tax exemption of the leave encashment on the retirement benefits of non-government salaried employee earlier was fixed as 3 lakhs. Now it's been enhanced to 25 lakhs. I think, right, there is a clear focus on government government wanted the senior citizens to just get into a safer kitty where they need not literally just worry, because India has seen the debt fiascos in last 2-3 years. So as such, the government has tried just protecting or safeguarding the senior citizens, and as such, they are given a very humongous kind of options to the senior citizen to get a guaranteed regular flow. Whereas at the same time, they want the youngsters who are majority in numbers, being an young economy with more than 50-55% from the younger kind of younger age groups. Government tried just making them as either spendthrifts or investors in the equity markets.
I think that's actually incredible because I think this is the best way to actually sort of tap the young demographic that lies within the country. And I think it's a wonderful opportunity, without a doubt. But I think that has pretty much cleared up all the questions that we have with regards to middle class earners. But coming to another significant segment in the Indian economy, which is occupied by HNIs. Of course, the middle class come at the top, but then come the HNIs because as per a research from 2019, it looks like around 7,000 HNIs left the country, while keeping in mind that they wanted a better tax regime, something that India is not able to offer because we have a massive surcharge of around 37% for this financial year for people that earn over 5 crores, which is pretty massive. And as of 2022, it is expected that around 8,000 people are expected to leave the country while keeping in mind that they want to have a better taxation regime. So, what does the government have in store for us? Of course, we were able to hear a few announcements, but it's better to hear from the horse's mouth.
Yeah, that's great, Adarsh. Actually, just one is when you talk about HNI, that is the high net worth individuals whose income is above a crore. Because above 50 lakhs itself, actually, just there is a surcharge that comes from the government, which is above 50 lakhs of taxable income, 10% is a surcharge, and above a crore, it is becoming 15%. It goes on and on from there. So that's where actually just more than, as you rightly observed, 8 to 10,000 kind of high net worth individuals they would have probably just sought for a different location had the government not taken an initiative to reduce their taxes, because on top of the surcharge there is also a cess tax. So it's all the consumption 40,000 to 50,000 crores of consumption comes from this particular segment. So actually just in this budget the government has just brought down their surcharge from 37% to 25%. So this has a resultant effect in the sense, right? The slab gets reduced from 42.7% to that is, it gets reduced by 3.7% from this one. So just that is really just good. Otherwise, whatever you observed is right. So otherwise, probably just these people might have thought of just migrating elsewhere.
I think this is actually a good move because bringing the surcharge down from 37% to 25% will probably encourage stay
No,
within the
that is
country.
a surcharge reduction. So in terms of the actual benefit, it will be from 42.7% to 39%.
So I think it is a pretty marginal change, but regardless, a change is a change, and that is certainly going to affect the amount of money that they pay in taxes, and hopefully that does give them the motivation to sort of stay within the country and be a part of the story that
No,
we're
but
going to have.
Adarsh, I would love to just add a couple more points, because one is maybe just when we talk about HNIs, there is yet another kind of information they love to just keep it in mind, because if they sell a property beyond 10 crore, right, they cannot just avail the maybe just the taxation benefit under Section 54F. So that is a big negative. So when you talk about the HNI, so this is also something we'll have to keep in mind.
So I think the big earners will have some challenges going into the future, without a doubt. But of course, there are some tax benefits that they can avail to see to it that they do bring down their taxes. But that's something to consult us more. But coming to NRIs, I think non-resident individuals are growing in number in recent times. So I would like to hear from you on whether there's something open because NRIs are simply those people that have such a long procedure to put up with in the context of investing in mutual funds or in equity markets or any investment for that matter. So I'd like to know as to whether there are any tax proposals in store for the NRIs.
Actually, just there is no tax proposal as such to the NRIs, but not making any changes is changes itself is a good plus to NRI, I would say. because people normally just people they get excited if there is no big change uh, on the tax reforms as such.
So, are there any changes in terms of the documentation that an NRI must follow while investing in Indian markets? Because as of now, it's actually a pretty complex procedure. So, have any changes been announced with regards to the level of documentation that's required to invest in Indian markets
Now,
from
that
the
is
perspective?
something which we just expected that would happen in the budget, maybe, right? More on digitalizing the thing and all kind. So, of course, that's not announced, but actually, this government has got very major plans to just one is just to simplify the KYC process. And also, just in the startup space as well, the government wants to just make a majority kind of make a massive reform, I would say, that will definitely just benefit the NRIs, I feel, because I have a slide which talks about the kind of benefit to startups, which in turn will help the NRIs as well, because a lot of investment happens from overseas in startups. So, as I said, just probably just there is an extension in the date of incorporation for income tax benefits for startups, which was earlier fixed as 31/3/2023. That's getting extended by another 1 year, and also just they could carry forward the losses on change of the shareholding, which is pretty common, right? So earlier it was up to 7 years they could do the carry forward of the losses. That is just extended up to 10 years now. And also just startups are also just eligible for 100% tax break on the profits made for the 3 consecutive years out of the first 10 years of incorporation. So just the actually just the only condition is the turnover should not just cross 25 crores in any financial year. So the moment they just cross, right, they will end up just losing the tax break kind. Many NRIs, they just end up investing in startups as well. So this definitely just encourages, because startups will go gung-ho as such. Definitely NRIs would be more than glad to just invest here.
I think you more or less answered my next question with regards to startups, because startups have dealt with a very challenging year, to be very honest. And as per research, I think around 2,404 startups had to shut shop in the year 2022. That is more than double the number of startups that shut shop the year before. And that is a sign of the havoc that the pandemic has caused. And I think these tax benefits, particularly in the context of carrying forward the losses over a period of time and the tax break on profits, will definitely benefit any up and coming MSME or SMEs across the country. Now, I think we have also answered another question to some extent, but not to a great extent, and that is with regard to senior citizens. Of course, a few announcements have been made with regards to senior citizens, but we'd like to hear from you on what is in store for them.
Yeah, as we just started the discussion stating that governments have just tried safeguarding the senior citizens, there is a scheme called Senior Citizen Savings Schemes, SCSS, which one could just either take it from the post office or from select nationalized bank counters. See, just the limit of the investment per individual was earlier 15 lakhs. That's been enhanced up to 30 lakhs. And again, actually, just there is a small saving investment, the post office monthly income scheme. Earlier, per individual limit was 4.5 lakhs. So something which can just give them a kind of a monthly return. That limit has been enhanced to just 9 lakhs. So I think that definitely just this adds a lot of value. And as I said earlier, right, government has tried safeguarding senior citizens by giving just a kind of a guaranteed kind of a schemes. And then they just tried just giving youngsters a huge chunk of money. Either you just enjoy life or you just end up just investing in market oriented products. So that was a clear idea, and they are really safeguarded in this budget, is what I would say.
I think it was very vaguely conveyed, but I'm pretty confident that was the intent. The intent was to get the youngsters to invest more while offering safer avenues with a good interest for senior citizens. Of course, the senior citizen savings scheme is well attractive for anyone over the age of 60 at this point of time, so they are always free to reach out to their respective post offices. But of course, when it comes to clarity with regards to NRIs once again, because there were some announcements made with regards to tax collected at source. Because at the moment, under the LRS scheme, one is supposed to so there's a TCS of around 5% that is charged, but that has been increased to around 20%. So I'd like to know your thoughts on that, and I'd like to have better clarity on that.
Yeah,
For the benefit of the audience.
there is a tax collection at source. The TCS was there even earlier. That was applicable at the rate of 5%. So under LRS, right, one can just transfer close to just what to say, just uh, there is a threshold, right? Two and of one can
I
just
think that is
in terms of rupees. In
$200,000.
terms of rupees, right, it is just closer to just 1.8 to 1.9 lakh crore.
All right.
One could just
All right.
maybe just transfer under the LRS route, right? So just as such, actually, just the tax collection at source was just earlier kept at 5%, and actually just there are a few exemptions to this one, right? So just that's been just changed to 20%. Probably this is going to have a very serious impact on the overseas investments instead of putting it as an NRI for the overseas investments. And of course, right, this does not apply to the medical and the education and all kind, right? So just maybe the limit was set as 7 lakhs. So now it is just irrespective of the limit, right? It is 20%. And leaving this two particular requirement, maybe just if somebody is transferring on the medical grounds or for the education, it's not going to get affected, but rest it's going to get affected. So it is more or less to the Indian investor who goes and invests in the overseas markets. So it is literally to say, see, India is shining better, invest in India. So why do you want to just go after the other overseas investment destinations? If you want to just either invest it through a safer route like maybe your exchange traded funds or the fund of funds in the mutual funds like. So invariably they try to tell that one only.
I think more or less, I think all flows are probably going to come into the Indian markets, which I believe is the sweet spot for anybody that is looking to make a good return, because a lot of foreign investors have been investing sizably. So foreign FPIs as well as FIIs have been investing sizably. So that's a clear-cut sign that obviously we are going somewhere. But I think the most important segment in the country consists of women. I think women are people for whom the government has done quite a lot, starting from the Sukanya Samriddhi Yojana to help girl children, help parents invest in the name of their girl children so that they could have a better future, better education after a certain period of time, particularly from the age of 18. And then, of course, in the previous budget, that was in the year 2022, there was an allocation of around 28,600 crore given to Beti Bachao, Beti Padhao, which was again another movement to encourage women to, or I would say girl children, to study and become more literate. But of course, I'd like to know whether there's anything that has been announced this year to sort of boost up that particular scheme or that particular category.
Yes, he spoke about Beti Bachao, Beti Padhao. I was even just expecting Beti's business Bachao kind of a campaign will be there. And of course, that is not there because a lot of women literally struggled during the pandemic to run their business with a lot of people who are sick of the family as well. So that didn't happen. But actually, just government government tried just bringing in a certificate like this thing called Mahila Sanman Saving Certificate, and which was just launched with a maximum cap of 2 lakhs, and it's for a period of 2 years, and which could offer 7.5% per annum. So like it's clearly at least a minimum of 1.5% from the bank rates. I would say the minimum deposit is 100, and it could be and actually just it can be made regularly as well. So, but actually just it is going to be open until 31st March 2025 is what government said. So. So that is something which applies to just both women as well as the girl children.
I think that sounds pretty good, without a doubt. I think it's a pretty good saving scheme that offers a very good rate of interest for people that are looking to save small and get the maximum. But with that said, of course, the number of women across the country are very, very high, and I think a scheme like this is certainly going to help them. And from an entrepreneurial standpoint, you wouldn't believe it, but around 14% of the total entrepreneurs across India are women. That's right, around 14% of the total entrepreneurs in India are women. And of course, you're one among them, which is truly amazing. And the number is only expected to go up because the number of women CEOs in the country have also grown in number. So we'll see a lot of budding CEOs that are females. And I think these schemes are definitely going to help them, handhold them, and give them the opportunity of getting to that stage at some point of time. Now, coming to the investment world, I think this is the part where most investors are probably interested. They would like to know whether whether there have been any changes announced with regards to the long-term capital taxation or the short-term capital taxation in the context of mutual funds or debt equity or any other form of investments. I'm asking this question in the benefit of the audience, so I'd like to know from you.
Yeah, one is actually just there is no change that's specifically made on the investments. And obviously, just I need to touch on insurance. And before me getting into insurance, probably real estate investment trust is one of the most spoken investment avenue in the overseas markets, which hopefully just got into India as well. And in the official route approved by SEBI. And say just the cash flow distributed as out of the capital to the investor, even that is getting taxed at the marginal rate. So, right, it was exempted earlier. So that is one negative news, I would say, probably. Maybe, right, the repayment of the capital should not get taxed, but the taxation which is being imposed on that is a negative kind of a thing. And there is no change in the corporate tax rate and all as such. And whereas actually this one is that, and when it comes to the insurance, maybe so just whatever is annual premium that is contributed in excess of 5 lakhs, that attracts tax. So the maturity process of that particular policies would attract tax. And obviously there is some kind of a time until this financial year end. So the old things will follow of tax exempt kind. Post that actually just a maturity process of above that threshold, as I said, is 5 lakhs, will get taxed.
I think it's actually good to know. I think there was also a provision on market linked debentures. I think even market linked debentures will be taxed under, I think it'll be taxed in the same way that equity is taxed, which I think is a very, very important thing that one should remember. But we'd like for you to add to it in case if you have any thoughts.
Yeah, that part definitely I want to just elaborate a bit, because equity linked debenture or market linked debenture is something which is getting a different kind of a taxation. And we'll talk about this in the coming slides. And above all, right, one is when it comes to the ELD or MLD, the main thing that the investor needs to look at is the underlying collateral, the strength of the underlying collateral. So this particular kind of tax imposition is just given as investors, they end up investing without understanding the safety part of the underlying collateral. They literally focus only on the tax efficiency, because you have a listed company debenture and the unlisted company debenture, it goes with that one. So just there was an attraction on the MLD. So government has just tried cutting it short so that investor reduces their exposure there.
Just a quick correction. By the way, MLDs will be taxed as per the applicable tax rates, that is, as per your tax slab, not as same as your equity taxation. That was actually a mistake. So please forgive me for that. So I'm pretty confident that even
No, in the budget, it is getting taxed as a short-term capital gain. Earlier, it was not so. Now it is just, earlier it was like marginal. Say earlier it was on the thin border of 10%. Now it is as per the tax slab. So, and because it is considered as a short-term capital gain in this time.
So please keep that in mind, because I think MLDs were actually a safer avenue for a lot of people that were looking to pay a lower tax, people that belong to the 30% tax slab particularly. So please keep that in mind when you invest in MLDs going forward. So of course, you've also provided a sense of clarity on several investments, including REITs. But I'd like to know whether if you have anything to touch upon with regards to real estate investment trusts, because real estate investment trusts have actually become an attractive investment option for many Indians across the country, because it's an opportunity for them to get returns in excess of over 8%, 9% in a year. That is the yield, that is the rental yield that the REITs are offering at this point of time. So it's a pretty attractive investment option for people that wish to invest as little as even 500 rupees in a share. So it's a wonderful option. So I'd like to hear from you on whether there have been any changes with respect to real estate investment trusts or infrastructure investment.
Other, just now we spoke about it, stating that actually the principal is just getting taxed, the reimbursement, that is the distribution as the redemption of the principal, right? That payout is getting taxed as per the tax slab, the marginal rates. And in India, it is not that attractive. Maybe just for the overseas investor, getting a lesser return was also attractive, given the kind of diversification that it makes. and the tax efficiency it was serving earlier, because in the overseas markets, their savings bank rates were much lower, and as such, they were getting excited if in case they end up just getting 3 or 4% as it is formed as a trust. Whereas in India, it's not going to be that very attractive, to be frank. And further, this tax imposition will bring down the attraction.
I think that actually clears up a lot of queries that we have with respect to investments. But the most important question that most of us have is new regime versus the old regime. I would like to know from you on what you believe is the better regime for the people that are watching this video at this point of time, because I'm pretty confident that both regimes have their own pros and cons. And I think it's something that we're able to clarify during today's video. But of course, I would like you to elaborate even further and provide us a walkthrough of what the new regime means and what the old regime means. Because sometimes I think the new regime might actually apply to people, regardless of whether they are a spendthrift or a proper investor. I'd like to hear from you on that.
Yeah, as you rightly observed, new tax regime is basically designed for the spendthrifts, and the old tax regime is designed for the investors. Because for an economy, both investors and spendthrifts are equally important. And actually, there is no change as such in the old tax regime, which was announced earlier, because it's in the same way it gets continued up to 2.5 lakhs. The tax is nil. 2.5 lakhs to just 5 lakhs, 5% is a tax one needs to end up paying. 5 to 10 lakhs, it's going to be 20%. 10 lakhs and above, it's going to be 30%. And actually, just there is a standard deduction of 50,000 that applies. That means it says up to 3 lakhs, the tax is nil under old tax regime, like you can take. When it comes to new tax regime, which is majorly just designed to the spendthrifts, it looks very attractive because right now, somebody is earning an income of 7 lakhs, then they can just get into the new tax regime with, they need not pay any they need not pay any taxes, because the 87-year rebate goes up to 7 lakhs a year. Having said that, actually, just if in case somebody is just getting 7 lakh 1 rupee, that is anything above 7 lakh, up to you can say 6 lakh 99,999 and all, it is exempted. Even a rupee, the moment it crosses 7 lakhs, people need to just go back to the slab. Up to 3 lakhs tax nil, 3 to 6 lakhs, like it goes. And actually, just the tax rebate is just applied here, which was not there earlier. So, and we earlier just spoke about the surcharge, which was just reduced for above 5 crores kind of an income. So, by all probability, right, we could say just maybe right up to 15 lakhs. If somebody does not have any investment, then actually just the new tax regime looks very attractive. Maybe there is yet another slide which can probably just give you an understanding, stating that what is the kind of tax impact it is given in this budget. The new tax regime, even earlier, it was attractive. See, just you go to the 2020 to 23, people who were just earning up to 15 lakhs, they would have just ended up paying a tax liability of 1,87,500, which was brought down to 1.5 lakhs in this budget, which is a sizable reduction of 37,500. So that is what the finance minister is talking about, 37,500 kind of a further kind of a benefit. So up to 15 lakhs new tax regime, if in case a person does not have any investment, goes really attractive.
I think that actually sums up a lot of what we were expecting from your insight on the new regime versus the old regime. Of course, there's still a pretty complicated task for a lot of people that are filing their returns. So all you have to do is reach out to us at Genera 7 block, because that's where we are at. And you're always free to visit us at our office or call us. But before that, I would like to hear from you on a couple of more things, because I have two questions with me. And the next question that I have in mind is your sector-wise outlook. Because in every budget, what happens is there are some sectors that heavily benefit. In the previous budget, a lot of emphasis was given to capex. I think a lot of capital expenditure was incurred in the context of infrastructure. So I'd like to know on what was the major focus. I think you did iterate that a lot of focus was given towards green growth, infrastructure, and banking. But I'd like to know what sectors have actually benefited from this and what sectors have negatively benefited from this.
So as we started initially, right, almost all the sectors are just gaining strength through this budget, especially the infra-oriented, be it cement, steel, and maybe just a BFSI, capital goods. And these are all sectors which are gaining momentum. And probably this agriculture, I would say just neutral, because nothing great has been announced for them. So it's neither positive nor negative. All the sectors are just getting a positive momentum because of this budget, leaving maybe a couple of things. I would say one is insurance probably a bit, and because of the taxation that is being imposed on the traditional plans. ULIP taxation was imposed even a couple of years back, and the real estate and oil and gas. So for these two sectors probably just it's going to be slightly negative, and there is a reason as to just why I say so, because there was an expectation from the oil and gas reading that actually just because whatever is the last, right, they could offset it. That was an expectation because of the pandemic, right? They were expecting a kind of a compensation, for in the financial year 2023 to offset whatever is the marketing losses that they have just incurred on the auto fuel and all. That wasn't granted. So that is probably just taken as a negative kind of a thing for the sector. And again, when it comes to real estate, as I said, just one is the REIT or taxation, which we discussed earlier, which was not there. And other on top of it, just one more kind of thing is if there is a capital gain incurrence for maybe just there is a cap on the deduction. So just if the capital gain incurrence on the investment is more than 10 crores, then they cannot avail the section 54F kind of a benefit. So that is also a kind of a negative kind of a thing to this one. Rest all, I feel like by and large is pretty positive, leaving these two sectors. And insurance is also probably not added here, but definitely it is.
I think insurance, real estate, and a few sectors have certainly taken a beating, without a doubt, because with the increase in loan rates, obviously, buying a house may not be as popular as it once was. But with that said, of course, overall the budget was more or less positive. But of course, usually we take a look back at the budget and we think about the expectations that we had and we try to compare that with what actually went down. So I'd like to hear from you on whether most of your expectations came true or whether if you feel let down. If you feel let down, then please let us know as to why you were let down by the budget. But I'd like to hear from you on your overall verdict of the budget in general.
No, overall, actually, just if we go look at what to expect from budget kind of a video on the current one, so maybe just the expectation versus reality is we expected that the basic exemption limits will go up and the rebates will go up, and that in turn happen. We thought that they will encourage the youngsters as well as middle income group. So they have really just encouraged the youngsters to either invest in equity or to spend in a massive way indirectly. And they have encouraged the middle income by, because middle income is one of the segment which took the brunt of increased taxation because of the fuel prices as well as the increased inflation. So they got a fairly decent kind of a compensation when it comes to the taxes. And then there was a solution to the tax dispute, which we didn't speak in the session, because close to just 12.5 lakh crore is the money that is under a tax dispute in the financial year 2022, which was earlier closer to just 4.5 lakh crore in the year 2014. So just there has to be a speedy redressal is what we felt, and government is definitely focusing on the speedy redressal to just bring down the tax disputes. And focus on digital education is what we spoke even earlier. So that is definitely gain strength. And HNIs to pay less taxes, what we said, just, and obviously there has been a reduction to them as the surcharges just brought down. And as such, actually, they end up just paying 3.7% lesser. And taxation on traditional insurance policies, we vaguely expected as huge chunk of money was just getting into traditional products, because government is worried about people getting over committed or over promising on the guaranteed products. So that is one thing. And favoring startup companies is something which we spoke. And then the extension of the tax break holidays and all we spoke, and the incorporation limits we spoke. Everything is spoke and it came true. And the green energy is something we spoke and it came true. So I think these are all something which we just expected and which came as a reality, and that's pretty good.
So on a scale of 0 to 10, I would like you to rate the budget. So there's one question that I didn't have on my list. I just made it up right now. So on a scale of 0 to
Probably
10,
just let me move on the screen so that I think investors are the better judge to just end up giving the rating when it comes to the budget. Let me tell you as to just what kind of your rating should go on these lines. So let me say just one is let me talk about the practicality or what's actually just happening in the markets. One is Indian markets are trading at a premium. Okay, vis-a-vis the emerging markets, that we'll have to keep it in mind. So one is right, when I talk about as to what they need to do, and when you talk about the ranking on the budget, I would rather say just this budget is a very balanced budget which focuses a lot on capex, because the capex expenses, because initially when he started, government is overspending, is it good enough kind. So the spending, even in our previous presentations, we have spoken about good expenses, bad expenses, right? Just spending a lot of money on the credit card is a bad expense, and buying a car on a loan, all those things are bad expenses. Spending money on the education, other thing we talk about a good expense. In the same way, when it comes to the government as a budget, they spend on, it's called as a big budget, right? As I said, just they spend on banks, infrastructure, and the green energy. So in my kind of a thing, right, I will probably just put the rating as 8 out of 10. So if you feel like anything about 70% is the best rate, then I would say this is one of the very best budget. And we have to keep in mind that this is the 10th on the complete budget of this government. So they have tried just attracting the mass. At the same time, they have been very practical. They have not been overshowering on the subsidies and all kind. That's really pretty attractive. And yeah, that's a thing. So 8 or 10.
I think it's a very logical way of approaching it because I was expecting you to just give me one number, but I think you went through the intricacies and you gave everybody an unbiased outlook of how they must actually look at the budget. And I'm pretty confident that this session has given everybody a sense of insight on what went down at the budget. And I'm sure it also cleared the air surrounding all the false information that has probably gone around because that is pretty common in this world at this point of time. But of course, if you have many more questions, you're always free to reach out to us. You always can send an email to info@cprofitwealth.com, or you can visit our website, www.cprofitwealth.com, to pose a query or check out our products and services because we are a company with a wide range of products and services. We are known for our service. So always feel free to reach out to us. And that is us at cPROFIT. I'm joined by Miss Vanitha. I hope you're able to offer that insight.
Adarsh, I have only one
Yes,
more,
please.
one message alone I would love to pass on the, pass it on to the investor before we wind up the session. That is, at the end of everything, right? Everybody would love to know what is it I need to do now, right? So that is something just I drafted just for the better understanding of them, because the pen is mightier than sword. So I just put it in the PPT form. And investors, just please be aware it's a buy on dips market, because when we are globally receding, then it's an opportune period for us to just invest. So normally, right, average Indian investor gets excited when the markets are high. Maybe if you look at last 2-3 years, they got excited even when the foreign portfolio investors didn't get excited. So that's the proof of pudding is there in the eating. Last year, there was a negative cash flow from FPIs, whereas Indian investors and the domestic institutions overshadowed to the equity markets. So just going forward, as globally we are receding, it is good to just buy on the dips, on every dip is what I would say, because that is one thing, and allocate via just hybrid funds such as asset allocator funds and multi-asset funds if you want to play a moderate kind of a game. And the yield curve was flattened in the last 1 year. So just that makes it more attractive, because the repo rate has just gone up, as you know very well, touching around 6.5%, which makes investing in a bond fund is a very compelling option. And investing in very quality assets makes it even more attractive over a period of time. One is you get a diversified kind of a portfolio and quality portfolio as well. So the short-term or medium duration of the dynamic bond funds could be considered by the conservative investor, and the moderate investors could definitely consider investing in corporate bond or dynamic bond with a long investment horizon, and can also consider partly the asset allocator funds. And the aggressive investors should and must just consider the equity funds, preferably via a systematic investment route, or if they want to just add during the dips, they can do it. And avoid the market linked debentures. One is not because of the taxation. We spoke about the MLD getting a tax at the rate of short-term capital gains, and which is as per the tax slab. But not only because of that, even beyond that, the underlying collateral is something investors are not considering. So I would rather suggest them to look at it. And so just it is a best market to just, it is a A best market is just invest in equity, debt, and gold. It is very rare to find kind of a market. So there can be a better period than this.
There certainly cannot be a better period than this. So feel free to reach out to us to have a discussion at our very own office in Janagar 7 block. You always feel to contact us or email us. And always feel free to subscribe to our cPROFIT Wealth YouTube channel. And also feel free to check out our previous video on what we were expecting from the budget, because that will give you an understanding of what were our actual expectations prior to the budget and how things actually panned out. Thank you very much for joining us. I'd like to extend my thanks to Ms. Vanitha as well. We look forward to seeing you very, very soon. Thank you.
Thank you so much. And investors, let's make investing interesting.